Evening, everybody. It's 5:49 on this Thursday afternoon, the 21st of September, and this is your closing comment. I'm going to get right to this. Um, I speak with a lot of people every day, both in the Discord room, direct messages, etc. And everybody wanted to know today what was so different about what they said today from what they said last week or last month or the month before that. Why did the market react the way that it did from yesterday afternoon right through the close today, closing pretty close to the lows? And I'll tell you, it's really simple. The market is finally getting the message that there are problems. Um, the number of corporate bankruptcies for the year, 459 already. That's running about 2 months ahead of last year's numbers. Um, Earnings are getting decimated in places where you really wouldn't expect it. And frankly, valuations are totally out of range of where they should be for a market that has interest rates and growth rates where they are. So the short answer is, and I've written this, I wrote it, I think, about 3 weeks ago or 4 weeks ago in my weekly letter. It is the weight and preponderance of the evidence. It is getting stacked up so high that even all the bullshit that comes out of those cheerleading asshole teleprompter readers can't contend with it anymore. One of my subscribers and a close friend, Dennis, always says to me, you know, um, when the market turns down, when you have a bear market, everything that can go wrong does. And I think that that's partially what we're seeing. The number of zombie companies that cannot exist, regardless of what their market cap is, because they don't make money, they can't borrow any more money, and they're not earning anything, is becoming a real problem. I don't understand why people didn't get it, except for the fact that they didn't want to get it, and that the CNBC and Fox Business and Bloomberg people and CEOs all turned into cheerleaders. How great everything was! Look at the travel and transportation sector, the airlines, the cruise lines. You remember how great everything was? How bookings were pre pandemic. And, the fact is, and I've said this before, and I'm sure I'll say it again, they mortgaged everything they had up to and including their customer loyalty plans. They're not going to make any money. They took on debt, not to mention that the airlines stole billions of dollars from us while we tried to make the effort to keep employees employed. And they fired them anyway. And they hired new ones. You have to remember that the airline business is very seniority organized and sensitive, where older pilots, maybe not retirement age, but more experienced flight attendants, everybody who has more experience gets paid more money. They're gone. Not only are they gone, they've been replaced with new people that they can get away with paying dramatically less. In any event, so the unemployment claims this morning were the lowest that they have been for this entire year. 201,000 initial claims. That was down 24,000, which is to say down 25 on 225. Hmm, okay, over 10%, way off the number. The Philly Fed number was expected to be down 2. It was down 13 and a half after one good month last month, a surprise to the upside. And stocks closed substantially lower. Advanced declines were 6-1 on the NYSE, 5-2 on the NASDAQ, and volume increased again. 2 days ago it was 4.5. Yesterday it was 4.8. Today it's 5 billion. Um, and the IPOs are still making new lows every day. Cisco down almost 4% on the news that it's buying Splunk for $157 a share. The stock closed 144.43, up 24.84. As I said, 157 is the number, and it's up 21% today. TKO, all the fake wrestling crap, signed a new deal with NBC Universal, I think it was. The stock has only been public for 8 days. The high was 106. Today's low was 84.83, and the last 85.71, down $19. Um, that's a pretty hefty move, and I didn't see where the bad news was, so we'll just take that the way it is. Um, The bonds were down over 2.5 points. The dollar was higher by a quarter. The oil, which had a pretty big range on the day, actually closed in the middle of that range and down only 3 cents on the day. Nat gas was down 8 cents at 284. The big disappointment for me was the gold. I'm still holding it. We actually averaged down today, and the silver was down 15 cents, Bitcoin down 355. The chart on the screen that I'm showing you is probably the one place you should be looking the most, and that is the Russell. The Russell does not, the small cap Russell companies are more aligned with your local hardware store compared to Home Depot versus, the ability of the big cap and mega cap companies' ability to get money from banks. Small cap companies do not have the ability to pick up the phone and call Goldman Sachs and say, yeah, we need to refi this 4.6 billion, and it gets done. Or they offer shares and it gets done. These little companies do not have that. They end up doing business. I know I've said it before. They end up doing business with their regional or local banks, all of whom are getting priced out of the market, and all of the big mainstays are beginning to run into trouble with the government refining its massive amounts of debt and using that issuance, it crowds out the smaller or less highly rated companies. And that's going to continue. And you're going to see more bankruptcies, and you're going to see more problems. There's literally trillions of dollars of debt, floating rate debt, that is going to be not only this year and next year, but the year after that. And that is going to be a problem. So, what do I think? It's pretty simple. I'm not saying that the market's not going to have a rally in the last 2/3 or 3/4 of October, a month that, sort of like March, and like a lion out like a lamb. Um, the month of October is genuinely volatile, but it tends to end on the upside, and um, or at least well off the lows as the setup for the year-end rally. I think that's what we'll see. But what we're seeing here is this is a weekly. Um, I don't want to get into what the actual definition of a head and shoulders top is, because it generally appears not down here, but up here. It's a reversal pattern. What we've had, though, here, if you really look at it, you can see that what we've had here is a big up market, pandemic, new highs. Now, after that, it gets a little bit more, well, real. New high, reversal, back to support. Lower high, reversal, new low, support, test, support, right up to the point of breakout, collapse again. Lower high, about a little lower low, lower high, higher low, lower high. And now I'm looking at this area right here, and I'm saying shoulder, head, shoulder, neckline, break. Now, is there support at 17 and a quarter? Yeah, absolutely. There's support all the way down to 1700. There's actually support all the way down to 1643. But 1643 is 150 points from here. That's another 8 or 9% to get to support. 5 and 20 week MAs have crossed here. I'll take this in a little so you can see. 5 and 20 crossed when? The end of last week. MACD rolling over to cross when? Now. And we're not quite to oversold, although I'm guessing that we probably will be. But you can see shoulder, head, shoulder. It's a continuation pattern. If we break these closes in the 1750 area, there's very little doubt that we'll stop much before 1650. Again, that's a pretty substantial move. So now that I've been a ray of sunshine, I'm going to close. We don't have anything overwhelming for tomorrow. The only one that had decent earnings that acted in a positive manner today, Federal Express, 362.20, and that's up 1168, 4.7. I'll be back in the morning.